Andreas Christensen, founder of Super One, and we are today broadcasting from our headquarters here in Norway, a little bit south of Oslo. And we are today going to cover what we call token magic. And this event will be all about the values, the financial values we create in Super One, and what our estimate and projections are, how we calculate them. We're going to take you deep inside our calculation and reveal the whole sort of business model. Towards the end of the presentation, we're going to give you some really exciting news about our token and how we are rolling it out into the market. And we will also, at the end of this session, publish a new video. It's the first showcase or the first little trailer of a new video we have created that we will have at the end, or nearly at the end. And at the very end, I will answer any questions you might have related to this presentation or any other questions related to Super One. Today, I give you a little bit of warning. There will be a lot of numbers, and these slides will be published after the presentation, so you can digest them very well. And it will be a lot of consideration. And I would like to say one thing before we start. As a kind of disclaimer, we will add it in the slide deck before we release it. But these are all based on estimates. These are not any guaranteed or any solicitation of investment. This is the business case, how we model it and how we expect it to roll out. So having said that, I think we should get started and get into presentation mode. So I will start sharing my screen and we will start moving. Okay, so from the outset, we always talk about how we can delight the players, and we talk about how we can delight the business, like you great affiliates and our other stakeholders, whether it be shareholders, whether it be brands, advertisers, all that, or content providers. We always talk about how we can delight them. In that sense, we mean how we can make them happy, how we can make them to make money, and how we can thrive going forward. So today we're gonna reveal figures for the company from a shareholder perspective. It's maybe not relevant for you, but it's relevant for you to see how we create value, not only for you as affiliates, token holders, and so, but to see how we generate value and how we have aligned interests with you, and how we take a great portion of that and divide into the tokens. That's very important for us to showcase. So the revenue streams of this company is coming from basically three sources. It's the pure game revenue. It's the cards, the NFT revenue that's also closely tied to the game. And we have the spaces, which is the advertising revenue. So all of this comes from the game. And we will have the release date for the game towards the end of this presentation. So stay tuned. There is a huge market out there. And we kind of created what we mean a very conservative financial model. So from the outset, the tokens earn 10% of every transaction. That applies to the super token, and all of you are great holders of that, and it will perceive a lot of value as we move forward. In our presentations, we have talked about how we can drive 1.5 million players, which is what we need on a regular basis to run one tournament every week. And this is the easy way of presenting these numbers. This is the what you call napkin version. So the numbers still apply, but now we're going to dive into the details. This is The same with the 5 million players, gives you $1. It's all applicable, and it comes from one source, of course, and that's always been doing that. So now we're gonna take a much closer look at the numbers, and we're gonna change to what I call much more demanding and boring slides. So what I need to explain to you is how we calculate and how we estimate our financials. It all starts with the cash tournaments that we have created. And these tournaments, they consist of a number of rounds and number of entries. And each of these have 20 million entry tickets. That doesn't necessarily mean 20 million different players, because one player can have, in example, 20 tickets. So a million players can turn this around. But based on the average spending in the gaming industry, we foresee that we need 1.5 million active players to flip around one tournament every week. And we will not get that instantly. So we will not be able to start with 1.5 million players, not like a light switch where you switches on and suddenly all of a sudden you have 1.5 million players. No, it starts gradually. And that's the second table here, where we see the scale of a tournament from one tournament every month towards 4 tournaments every month, a weekly one, towards the end of the first year. So we take 1 year where we scale from 0 to hero. Okay, and then during the second year, we scale from 5 tournaments. We start at 5 tournaments in the very beginning and end up at 8 tournaments, 2 tournaments a week. So that's how we model. That's the basis for the whole financial model. And when you look at number of players based on the average spending we calculate, we're looking at starting with 300,000 to 400,000 players, and then we'll scale it, and we aim to reach 1.5 million during the first year. Then we foresee to double that in the second year, and then the growth will slow down because it's kind of getting to a certain maturity in the market. So from that, we can see that the potential here is like, let's say 5 million paying players. It's pretty large number, but it's our little moonshot. And I will show you that in the calculation. We don't need that to make money. So this is the foundation. These boring numbers are the foundation for everything we do. That's where it starts. And we can make all kinds of scenarios, but we have created one base scenario that we feel is very conservative and that we truly believe in. It could be variations from this. And like I said in the beginning, these are only estimates, but that's what we believe in. That's what market research is. Not only what we believe in, we also had professional financial advisors working with us for months in creating these numbers. So this is nothing we just mock together. This has been carefully considered and modeled. It's a very comprehensive, and I would like to add, professional financial model I'm showing you over the next slides. So when we start here, you look at the game revenue in year 1. The game revenue is then estimated to reach $450 million based on an average number of players throughout that year of about 900,000. And in tournament prices, we will return for 210. We will pay App Store fees, $112 million. And that's a very, very big expense for us, the App Store. We calculated it at 25%, although it's 30%, because we expect some revenue to come outside the App Store. So then we have the super token staking fee, and we will get into very detail on this. That's $45 million. That goes 10% of the turnover goes directly into the staking fee for the super token. So that leaves us with a net gaming revenue from the game itself, only from the game, at $82 million. And then we have calculated a 20% affiliate share for the financial purpose. It might be higher, it might be lower, it will vary, but affiliate is what we share into the binary model. And this is balanced. We will not have all the revenues will come there. Some will also come from direct affiliates, and we can't pay double. But the average amount there, it could be 30% in general, like we said before. It could be 10% for certain occasions, but in general we use 20%, and that's $16.5 million going in already that during the first year. But that's just the first year. As we move on, you will see that the game revenue increases towards $1 billion, 1.7, and then it all accumulates up on 2.4 in year 5. So that's the game revenue. That's the elements of the game revenue. Then below we have the cards revenue. And the cards revenue is based on $25 every time one of these premium cards are used in the gameplay. And we will have $233 million in the first year. And we will have the App Store fees of $58 million. And then we have the super token staking again, $23 million coming in. And then we have the unique card staking fees of 20%. We calculate there, it's $46 million. And then we have the net card revenue. And then we, of course, have the affiliate share again of 20%. So the cards, while the game is giving us $66 million, the card program is actually giving us $84 million the first year in direct profit. The reason for this is we pay this really high App Store fee, or in the game sense, we pay the tournament prices. Then we move on to the spaces, which is the advertising, and they will bring in $230 million. That's based on the 33 cents in revenue per action from the advertisers, and we only consider 25% fill rate. So it's a pretty conservative number. Again, we have added agencies fees of 20%. There is always an advertising agency out there. And we have the super token that will stake every transaction, $23 million. And then we have staking fees for the Spaces program that we haven't even released yet. That will come in at 46. And then we have 150 million that the affiliates get another 20% from. So altogether, we are bringing in a total of $242 million in profit after we paid everything during the first year. And of course, again, this is projections. All this is then scaled proportionally over year 1, 2, 3, 4, and 5. And we used multiple methods for that. I will get back to that. So this is the foundation for the calculation. Now we wanted to show you this to be very upfront and transparent in what we do, so you're able to digest these numbers yourself. You can ask us any questions, and we can even provide you with the underlying calculation for this. It's a very comprehensive Excel sheet. We will not make that public for competitive reasons, but we are able to extract and give you all details. Not all, but many. So, wow. Now we were very unlucky. 1 second here. So running it in a separate screen. So when we take these numbers and project them into a professional profit and loss sense for the company, that's how we calculate the real profit, not only the profit margin like we did on the previous page. We are recognizing the game revenue, the card revenue, the space revenue. It all adds up to 914 million over the first year. And it's increasing pretty much to year 2 with 2.3, 3.4. I mean, this year 4 and 5 we can call moonshots. It's the year 1 that's, of course, the most critical and the most important one. Year 2 will probably follow very quickly after year 1, and then year 3 is a kind of mature and profit year. So when we look at the direct cost of the game, those are the costs we revealed at the previous page. Those costs are, like we said, the direct app store, the tournament, these things. We end up with a total cost base, direct cost base of 670 million on the first year and a net profit of 242. That gives us a gross margin of 27%. That's not that much, but it's a little bit in the ballpark of the average gaming company. Then we always use 5% in marketing, and we have additional expenses, and we have personal expenses. We are scaling from a headcount of 50 to a headcount of more than 210 in the fifth year. And we are scaling all this on a gradual basis. Most of them will be scaled during the first 2 years, actually. And then we kind of reach what we can call sufficient amount of people to handle, and we are not need to scale it that much. So the operating expenses comes in there at 59, and it leaves with an earnings before interest, taxes, depreciation and amortization, EBITDA of 183 million, which is about 20% of the turnover, which is a very good profit margin considered many other businesses. So the net income will be at 20%. And this model scales perfectly over to the next year. And as you see, we become a really high grossing money machine. So with 20% margin, there are still, of course, probably the expense side will always is something we will fight, but we consider with all the shares we give away in terms to affiliates, to app stores and prices, we will have a lot of margin. Maybe we could increase the marketing cost a little bit in the beginning, but at least we are very profitable. So when we move this into a balance sheet, because some of you might are maybe professional investors, want to see how we look at the cash balances and how we do the cash flow and how we do the accounts receivable and all that. We have an asset side that's developing from a current asset. We start with $20 million as we have an initial cash box sort of before we open the game, and then we start rolling with the cash from the I will show that in the cash flow from coming in from the operation. And we are developing this in a very healthy way, and with very little liability. We will have current liability, of course. We will have accrued expenses, payrolls, and we will have accounts payable. And we calculated all this based on industry standards. We will have the paid-in capital of 20 million, like we said, and we will have retained earnings coming there. So the equity is developing pretty healthy, and we are over the first 3 years, we become a really solid company, which is important for you as affiliate. I have many times talked about the long-term vision and how we are able to expand into other elements and how we can have a sustainable economy. And I'm not going to refer to other companies, but we also read the news and we understand what's happening in the affiliate market. And it's not only positive things these days. So I can't stress how important it is to have a healthy balance sheet and a healthy finances within the company. So let's look a little bit on the cash flow. We're gonna look how the cash is changing. I'm not gonna go into all details. You can study this yourself. But we have a very positive cash flow, cash-based industry, no cash-based project. As the whole gaming model is based on a margin on every dollar turnaround. So this is cash positive from the starting point, and that's very important. And then we will move on, accumulate cash, and we will become pretty cash savvy after a year or two. And of course, this will be able to be invested into R&D, new project, expand the platform, and or pay dividend, or both of it. For argument's sake, Facebook never paid any dividend. They have a big cash box, and they have been expanding into R&D, into other stuff, and really built the whole $800 billion empire. So what is important when we're looking at this thing is to see, okay, what do we need to get to break even? Break even is where the costs and the revenue are kind of zero. You don't make any money, but you don't lose any money. And we need 35,968 players at the RPPU of 60 plus spaces revenue of 21 on a yearly basis to get there. $35 million sort of will be our gross sales on the game and spaces together to reach break even. That will cover our variable cost, our fixed cost. So at that we will have zero in profit, but as you see, 35,000 players is not very much in a global perspective. So we also have scenarios here where we may be reaching 120,000 players. We will make 10, 11, $12 million a year, which is also pretty good actually. And then on the downside, we will be losing a handful of millions of dollars below 30, I mean, with 10 to 20,000 players, which is nothing. So the downside of this, and we can scale this down and we can scale it up, it's pretty flexible. So the cash flow projections are really good. What I want to look into now is the RPPU analysis. And the RPPU stands for average revenue per paying user. That means how much money we make for every user that is a paid user, not a free user, a paid user. So from the player growth model, we will have an average of 937,500 players in year one. And that will bring in, like we said, $450 million in game revenue. That's $40 a month for every player we have, $40 only. And then we have the cards. So that's 21. So if you add those together, you have 61. And that's where we there are some commas and things there. So $60 for game and cards. That's the market average that both skills and DraftKings have. So we believe that's very much achievable. Then we move on to the spaces. And the numbers here are $21 per paying player. But if we consider that we only have 10% paying players, like in example, in this case, 937,000 players, but that's the paying players, and we have 9 million total players, the RPPU, I mean, the spaces revenue will be 1/10 of this per RPU, which is average revenue per user. But that's $2, which is pretty much a low market rate. So we're looking at the total at the RPPU basis of monthly revenue for each player of $81 in total, including spaces advertising, and $60 excluding. And that's important. And when you look on the profit per player, if you go on the gross profit, we have $22. And if you look down to the net after personnel, after marketing, the EBITDA per player, we are down to 16, which is pretty good. So we will retain $16 from every player we have inside our ecosystem. So all this is scaling over the 5 years and provides a great basis for how we can move forward. And yeah. So let's start looking a little bit about the staking, because staking is what it's all about for many of you. So the super token first out, they will in year one retain staking fees from from the gameplay of 45 million. 23 million comes from the card staking, 23 from spaces. So all this adds up to $91 million in staking fee only in year one. And this is the crux of our business model, because this flat 20%, the 10% staking fee that's taken out of all gross transactions on the platform brings in a lot of money. And this, with 500 million tokens issued, that's what we anticipate is at least in staking, in the staking program. We have a total cap of 1 billion, but only half of them we consider will be in the staking at all time. And you see, then we will drive home only the first year, nearly $20 cent, $18 cent in staking during the first year. And if you're going to do anything, and now I should be very careful and say to you, when I do estimation of market value, I'm pretty open, and I say that if you earn $18 cent, it's probably worth at least 10 times in the market on any exchange. Most of the tech companies are valued at 30 times or 20 times, 30 times. This is the average in Nasdaq. So, but we use 10, which is we use 10 as a very conservative average, and so that will bring the value of the token during the first year up to $1.8. But this escalates pretty quickly. In the second year, you see $0.48 or 48 cents, 69 cents in the third year coming to the tokens, 84 in the fourth year, all the way up to $1 in year 5. At that point, we have scaled, like we saw, to 5 million players. So these numbers are pretty aligned with what we have indicated in previous webinars, etc. The next table will be the card staking with 46 million and the spaces 46. So total platform staking is $184 million during this year, given these parameters. And that's pretty good. We will become a really serious player in the DeFi market, and we will become highly, we will have highly regarded for delivering a consumer product with this type and this degree of staking. And this will move on as we see towards the end of this estimates at year 5, nearly $1 billion in staking. So let's work hard to get there. If you look a little bit on what happened on the affiliate side, as many of you are well-regarded affiliates, we'll be sharing during the first year more than $60 million in affiliate share. We will increase that over the years up to year 5, $327 million. So there a lot of the, how should I say, the profit is not retained by the company, but it is actually leaving to the token program in forms of super token staking, card staking, and affiliate share. And that's the crux, that's the kernel, that's the how to say, the strategy of our business model, is to share this on different stakeholders to make sure everyone have a great piece of the action. So that's the staking. And now I'm gonna bring in valuation. And now again, I will say a disclaimer that this is all based on the numbers we have showed you, and it's based on many small factors. I'm not going to cover all of them, and of course it's based on the market and capital influx, etc., etc. The first page I'm showing you is the valuation of Super One as a company, and you wonder why I'm showing you that. I'm showing you that to see how our value will compare to your value, which I'm going to show you on the next slide. So what we have arrived at a valuation now, given pretty high requirement in return with 200%, which is the alternative investment return. If you don't invest in Super One, an investor can invest in whatever company or whatever stock, he will require 200% in annual return to as an alternative investment if he's not putting money into Super One. So what we have arrived at is two different valuation methods. One is called the venture method, the first one, that arrives at a valuation of Super One of a little bit more than $200 million. And the other one is the discounted cash flow valuation. It's a little bit more complex, where you take the future cash flow and you bring them down to the current value today. We have retained the same 200% discount factor, which is very, very aggressive. And we use the exit multiple of 30 that's in the market, and we arrived at $190 million in value. So fair to say that a market value of Super One today is in the ballpark of $200 million, given this financial scenario we've just been looking at. So let's go and use the discounted cash flow valuation method and look at the various possessions you have. You look at the super token, and then what we do, we take the 5-year upcoming cash flow and we discount it. We use the same required rate of return of 200%, and it brings to a net present value of $1.4 billion. Personally, I think that's very, very high. And but that's the numbers. That's the numbers this formula calculate, and that's what our evaluators have signed off on. They actually signed off. A company signed off on this valuation, and it's all given the fact that we inject $20 million, and of course execute the plans and get the players and these things. So that's where we are, and that brings at 500 million token a current valuation of $2.85 per token. And again, as I have to say, this is all pending on that we perform and do as we envision in these estimates. If you look on the card program, we discount the cash flow at the same discount rate, required return of 200%. We end up in more than $700 million in value for the card program. They are actually grabbing a great percentage of our revenue, and that's why they're valued that high. And the same with Spaces. They will also end up north of $700 million. So the purpose of showing you this is not that you should believe this is the value on the street today. This is the value. As we move forward, we are able to build these values together. Maybe the market is not there tomorrow, so we are not able to get these kind of pricing or these kind of valuation, but this gives you a ballpark what we're talking about. Whether it's 25% of what we have here or it's 200%, I cannot say. But we have used all the kind of available mechanics and financial models, and we've been very prudent in what we've done. So we truly believe this base case is really something that's very, very attainable, and that's what we're moving on. So let's move to the juicy stuff. Yesterday, we deployed a new smart contract for the super token on the Binance chain. And we also listed the token on the Binance decentralized exchange Pancake as the first listing. We also did a nominal trade of $10 per token and locked it for trade. So the reason we did this is to showcase that we now are moving towards a very concrete token scheme. We will launch the game on the 1st of December with a Christmas calendar that's hilariously cool. Before that, like I said, June 1st, yesterday, we listed the token. 3 months later, on September 1st, we're going to open the token for trading on the various exchanges. We are listed on one. We're going to have multiple, and there are more things coming. So on September 1st, we're going to open for trading for those of you who have a pro pack, professional pack, or have director status. All the tokens will be released over a 90-day vesting period. That means that every day a little bit, 1/90th, nearly a little bit more than 1.1% of your token will be available over 90 days. The reason for this is that we don't want the market to flood. We want to have a certain control. We want to bring the market value in a healthy way upwards of this company. We don't want anyone to play with us, so we want to have that. And we are infusing market makers that will take care of this in addition. The company going to have a liquidity pool, and we're going to start the marketing a little bit before September, but that's just to warm up and to keep things moving. The worst thing we could do is to open for everyone to trade. That will really be deteriorating. So on the 1st of September, those of you with a pro pack or a director status in this company will be able to start trading. 3 months later, on December 1st, on the day we launch the game, we will open for trading for all the other business packs in the system. And they will have 90 days vesting. That means the same. They will get their tokens slowly over 90 days. These are already regulated in smart contracts. So what happened when we, throughout June now, we will release all the tokens into your individual addresses on our platform. The new tokens will be dispersed to your accounts. And then that will happen from our new smart contract. And then they will be released into another smart contract called a vesting contract. And in that contract, that's on the Binance Smart Chain, you will be able to see your address, and you will be able to see your vesting scheme and the dates. You can actually enter into the code. It's Solidity code on the Binance Smart Chain, and you will see that we cannot stop the release of that token. It's being released on a date and time that's preset inside the contract. And for information, I don't have it here in the slide. The team tokens will not be available before 1st of March next year with 90 days vesting. So the whole purpose of this is to bring tremendous value to the token holders, really big value. So to celebrate this and to really move forward together, we opened today. We actually deployed it yesterday, and some of you started asking. It's what we call a token magic, and that's where we sell tokens now. You can buy tokens outside of any package with your balance on the platform for $10 cent each. And then people are saying, hey, what's this? It's not in the packages, and how do we reward it? We pay 20% in direct bonus, and we will calculate the binary and matching afterwards and pay that in token. So why do we do this? Why do we circumvent the model? We do this because we want everyone to be loaded with tokens as we move forward. We want everyone to exhaust their opportunities to get a lot of tokens. So we have all aligned interests here, and we really want to focus on this, because this is a great chance. We cannot promise anything, but we are doing our very best from the company side to really move this in this crazy market out there. Like we have discussed and what we presented over the past weeks, our NFT scheme, the cards are moving on. And we are working now to get into some of the most hottest market with our NFTs, and our team is producing these NFTs, and we are shortly releasing them also inside the app. But to get that really moving, we need to also put a lot of marketing in. So this is also to get more resources into the company, get more power on the marketing, to get more more people engage. We have had meeting with some of the leading NFT promoters in the world, and of course, we need to push to get there. And it's not for free, that's for sure. And even if the NFT scheme is highly rewarding both for you and for us, we still need to get there. We are there now. With the first batches are ready. We're just waiting for clearance from the exchanges and the NFT stores. And once we have that, we will start pushing it. But there is a lot of competition out there, and we need to really boost this. So we really want you, and this will be very time limited. This will be for 1 week only, and it will never get back to that price at all. And the reason we do this, again, we want all of you to have as much tokens as possible. And this is a little bit free flow, and we're doing that. So we are very excited about being on the Binance Smart Chain. The transaction fees are a fraction of what in Ethereum, and we are looking at maybe $10-20 per transaction. And Binance is by far 5-6 times bigger than Coinbase. Is one of the biggest exchanges. Their ecosystem is really cool. So to celebrate that, we have already deployed in the app. You can buy, and you should really bring in as many people as possible. And that's why we want to keep the 20% frontline commission, because those of you who really take action and perform, now you have a great opportunity. You will be paid in Ripple in real time directly to your account, the 20%, while the binary and matching is more rewarding for the upline, and we will compensate that with tokens. So the reason for this is we are discounting the token internally. We call this a community sale, and we don't have much margin on this, so we cannot go all the way. So that's what we're doing, and we hope many of you will grab this chance. We're gonna have multiple webinars coming. So now I want to show you our video before I take any questions. We just have a great little teaser video. When life
Andreas, if you could just check the sound, please. It's not very clear. It's very quiet. If you can check the sound, please, for the video. It's very quiet.
What do you say, Arthur?
It's not very clear. We cannot hear the sound very much. We can just see the images, the clip.
Okay, so then
I think we will share it on over Telegram, and then it will be good for everybody.
Yeah, it's a high resolution thing. It's really good, but this Zoom is always playing me. So yeah, what should I say? It's a cool one. But anyway, we'll share that later. It's a good video. Any questions for me, Arthur?
I've been going through the questions throughout. So actually, members are asking if they can see the listing of the super token inside of PancakeSwap.
Yeah, they can do. We can. I didn't include it here, but we have the hash or the link and everything to the smart contracts, and of course the listing and all that is available.
Fantastic. That's the only question. The rest of them I've already handled earlier during the presentation.
But please keep in mind we don't do any trading yet, but we are gearing up.
Yes, of course. I've covered that as well. I've answered because that was one of the questions.
Yeah. Okay, perfect. Thank you, everyone, and welcome to Token Week. We're going to have multiple presentations this week. We're going to make sure you get that video sorted out the next 30 minutes, and it will be in Telegram. And basically, we start rolling. We're going to have another webinar on this tokenomics. Maybe not tomorrow, but at least Friday and Saturday, we're going to be very clear on this. So thank you very much, and have a great day. Thank you.